Hey, good morning, guys. It is day 76. Is it 76 or 77? I have to check. I'm going to do something different this morning. It's a walk and talk, but it's a new series, which I'm calling Rising Dynasty University. So today's session is basically RD101. In Rising Dynasty University, we're trying to own the future, not rent it. And so I've talked about several core tenant philosophies as part of Rising Dynasty. People wonder, is it a course? It's not a course. I'm not trying to sell money. But there are certain guiding pillars to this philosophy. I'm basically trying to teach you guys as retail investors what I think have been important investment philosophies for me and what I want you to learn from so they can be helpful to you in your own lives in terms of compounding wealth and growing money. And part of the importance of Rising Dynasty mindset is basically the power law way of thinking. It's that sometimes 5% of our investments in our careers can end up being responsible for 95% of our profits. That's how it works with the best venture capitalists in the world. People like the Sequoias and the Khoslas and others. They know that some of their YouTube investments are going to end up being what make them in their careers. And the same thing can happen with us as retail investors with public stocks, but most just don't have the patience for it. So I want to sort of teach you how to find these kinds of power law investments like a Carvana that can become these 100 baggers that can end up being just amazing wealth generators for you and your family. And so some good examples of this are people like Masayoshi Son. You've heard of him starting the Vision Fund up at, this is quite the Halloween setup here, the Vision Fund at SoftBank, where he piled a lot of money into different stocks. Some of them worked out, some of them didn't. But did you know that Masayoshi Son's greatest investment, the one that really built his career in SoftBank, was an investment in Alibaba in 2000, a private investment where he put $20 million into Alibaba just as the whole dot-com era was falling down on itself and it was crashing down. But that's $20 million investment basically grew to become worth over $60 billion, a 3,000x return for Masayoshi Son by the time Alibaba IPO'd in 2014. Then Jerry Yang, later on, the co-founder of Yahoo, put in $1 billion into Alibaba in 2005, bought 40% of the company. Jerry only had $1.4 billion worth of cash on Yahoo's balance sheet when he made that investment. This was pre-Twitter, okay? I'm sure that if it happened today, he would have been roasted. He would have been told that it was terrible. Masa's $20 million investment into basically a Series A into Alibaba was probably 10x the size of what the typical check would have been at that time from an American private company, internet company. And this was a Chinese internet company, okay? So the checks were even smaller for those back then. The point is that those guys took big bets on that single investment. And so we have to realize that when you find a Carvana, when you find these like non-consensus and hopefully right investments that you believe you have an edge on, you can't just put 0.5% of your overall portfolio into them. You have to put something like a significant amount of your own disposable money. It doesn't have to be the whole thing. You don't have to go full port, but you have to put in a meaningful amount so that if it does 100x, it's going to be important. It's not going to be 0.5%. That's basically goes from $500 to, whatever it is. You have to move the needle for you and your family. Okay. That's what these guys did. So they did deep research. They were non-consensus and right. That's the other important thing. Non-consensus and right. And when you find those mismatches between how a company is perceived and what you think is the true value that's embedded in there, you do have to go all in. Last thing I want to talk about. Everyone's talking this morning about IREN's $10 billion deal with Microsoft. It's another megawatt deal. The stock is up 20% this morning. Everybody loves it. It's around 75 bucks. In May, this was a $9 stock, okay? A few months ago. What did I see in it? What can you look for? What I saw in IREN back then, they were perceived as a Bitcoin miner that moved up and down with the market. What I saw is that they were getting into AI, HPC, and they had significant amounts of gigawatts in their pipeline that they were going to be energizing within the next 12 months. And I thought there was going to be a shortage of gigawatts to power these AI data centers, and that IREN would be in the catbird seat to do these kinds of deals. Didn't know when this kind of a deal, like on this type of a morning, would happen with a Microsoft, or whether it would be with somebody else. But I knew that this day was coming, and that there would be a significant re-rating of IREN when it happened. So for owning the future, not renting it, you got to be non-consensus and right. You got to put your chips on the companies that you research and find and believe in. And if so, that is one of the core tenets of how you are going to create generational wealth. And eventually either buy or build one of these big mansions, if that's something you want to do. Otherwise, just enjoy it. Enjoy the generational wealth with your family. See you back here tomorrow.